What's going on, guys? Welcome to another video by LD the Trader. Today we are discussing the unicorn model. Now, I know some of you guys are probably listening to this thinking, what the hell is this? I've never heard such a retail sounding method in my life. And to be fair, when I first heard it, I thought the exact same thing. But no, the reason it is called the unicorn model is because it is magical. I have never ever seen this model lose. Now, I'm not saying this is a 100% win rate because it's not, but it is something crazy like 90%. And until this day, I've never seen it lose. Every time I've took it, I've never lost. Every time I've seen someone else take it, they've never lost. So, with that information, we're going to teach you what it is today. Let's get it. So, the unicorn model. First, before I tell you the step-by-step process, let's listen to what the man himself, ICT, says about the unicorn model.
And inside of this up close candle, which is what? Bullish breaker. From low to high to lower low, right inside this range here, that's where that fair value gap happens. If you're bullish and you have that right there, folks, is a unicorn. It is such a beautiful, beautiful. Hear that? That's my excitement. That's how I'm pounding my hand here. I'm telling you, that is one of the strongest algorithmic entry patterns you can ever have, especially if you have just taken out sell side liquidity at the opening price or opening on 9:30, and you see that happening here. That's why I'm not afraid of entering here. But what if it comes back down here? It's not going to. It's not going to. It's just like a launching pad right here, and then it leaves it. And then every little imbalance in here, you just keep adding to it and waiting for it to go up.
So as you can see, I'm not really being dramatic when I'm saying this model's goated. So let's go through the step-by-step process on finding this model and also executing it. Number one, you want to wait for the 9:30 open, as the 9:30 open will usually do two things. It will either seek for liquidity or rebalance an inefficiency. This will near enough always happen between 9:30 and 9:40 before the 9:50 macro. You never want to enter on 9:50 the 9:30, because 9:30 is known for being a Judas swing. Just like the London Judas in the morning, it will take out liquidity, trick retail who think we're going lower or higher, and then do the complete opposite. So after you've waited about 10-20 minutes around 9:40 or 9:50 after the 9:30 open, you want to make sure there's been either, again, a rebalance of an inefficiency or a liquidity sweep, and then you want to see a fair value gap in line with the breaker in the other direction of the 9:30 opening. If you see this, you make sure you enter on the fair value gap that is in line with the breaker, with your stop at a place where if price went to, it is invalid. This is also key. You want to make sure there is a low resistance liquidity run. I have touched this on my market maker model videos. It is key. It makes it so much easier for price to run through. And again, you want to make sure the timing is in line. Just before the 9:50 macro is okay, 9:40 max, but preferably between 9:50 and the 10 past 10 macro, NYC time. But when does this occur? This occurs usually when there's a news embargo at 8:30 and when there's a clear trend within the market. So, example number one. Remember the timing, 9:30 to 9:40, we usually see the Judas. So 9:30 here, remember to look at the times here. 9:30. We've gone up. 9:40, we've took all of this trend line liquidity, and then boom, big sell off, tap, go. So remember, how do we identify a breaker? High, low, higher high, lower low, FEG in line with the breaker, boom, just like that. So this is an example of where price didn't actually launch off the FEG line in line with the breaker. This is why I always say, when you take a trade, always put your stop where price would be invalid if price traveled to. So if you went for this FEG here in line with the breaker, why is this the breaker? Low, high, lower low, higher high, breaker FEG. And you put your stop something like here, you would have got stopped out before price decided to launch. This is why if I did enter here, my stop price, My stop would have most definitely been under here, but even to be safe, probably under here. It is a wide stop, so this would have probably been the better entry, of course, as well with premium and discount. But with the unicorn model, it most definitely could have just absolutely smashed through it from here. So this wouldn't have been a wrong entry. Just make sure your stop is in a place where if price went to it would make your bias invalid. For this example, I'm just going to draw a path so you completely understand it. Let's say, oh, that is the wrong one. Let's say price is in a sell model or in a downtrend, whatever you want to call it. And then 9:30 opens here. We go up, take all of this buy side liquidity that will be built up, trend line liquidity. It's going to think retail, and not even just retail, other traders as well, even smart money concept traders thinking that we're going to higher. They're going to enter here, and the FVG that will be caused here. But then it'll go down like this. FVG breaker. Continue lower. This is it. I'll draw the breaker out here. In line with a big, let's say it's a big FVG. Like that. This is how you trade the unicorn model. Always be aware of the 9:30 Judas. If you are aware and you execute this well, as I said, I've never seen it lose. You can most certainly wrap the money up and pass that funded alone with this model. So yeah, that comes to the end of the video. If you are still struggling with the unicorn model, lucky for you, I have a free Telegram chat below. I take on the trading days every single day with the team. We're smashing it at the minute. Things are going great. So yeah, make sure to join. It's completely free. And yeah, hopefully I'll see you guys there soon. But for now, that is all. Take care and peace.